This is S&P 500 seasonality, all right? Now, what we usually see is the second half of July, you usually see a drop in stock prices, right? And so if for any reason stock prices fall over the next week or the next couple of weeks, don't be surprised, because that is kind of a usual seasonal pattern that we usually see stocks fall during this time period, right? Now, I have a little bit of a theory in regards to this on it, and if I actually see this as kind of a realistic thing, okay? And I saw this. This was put out at a few different places. I saw this, and I believe it was on Twitter as well. Okay. Now, what I've been continuously seeing, this is a whole different year in 2023. Every single time somebody shows one of these kind of like bearish charts that's like why stocks are going to go down or why they could go down next week, next month, whatever. Every single time they've pretty much been wrong this entire flip and flapjacking year. Now, why is that? My little theory is, if everybody sees this stuff, because the thing about Twitter is, and especially on finance, like it seems like even big money looks at Twitter. I'm not talking about just small money. I'm talking about fund managers, a lot of the folks that go on CNBC, a lot of analysts, they all use Twitter. So a lot of times these people see these same exact charts, and they think the same exact way. And so they make moves prior to that. And so it never actually comes to fruition, right? And obviously in just kind of a raging bull market like we've had certainly this year, right? I mean, every single time I see one of these things, it just ends up not being wrong. So the thing I always think about is I'm like, watch stocks go up over this next 2 weeks and just break everybody's brain because they're like expecting them to go down, right? That's all I think about, man. So it's a really fascinating market, and the best thing for you as an investor to do is just understand if you get some great deals over the next couple of weeks in stocks that you love and that you want to own, great, you can take advantage of those opportunities, right? But don't, sometimes people think they can try to outsmart the market and like, oh, I'll sell out of these stocks, last week or the week before, and then next thing you know, they have to buy those same stocks back at 5%, 10%, 15% premiums. And they're like, why did I just do that? Or they don't buy back in hoping it goes down and then it goes up even more and more and more and more. And they're like, oh, when can I do this? Okay. I want to show you something absolutely mind-blowing. Okay. Absolutely mind-blowing. This, I believe that I saw this actually on Threads. And I was like, this is fascinating, right? It goes to show you if you had $10,000 invested in AMD back in 2015, right? What that amount amounted to over time, right? And it was 146,000, 304,000, right? 920, 376, as of recently, $700,000+, right? And obviously Lisa Su pulled off an incredible kind of comeback, but I think AMD is a story of retail investors, actually. And obviously what Lisa Su has pulled off at the company is just, I think it should be applauded forever. I mean, she turned that company from, it was less than a $2 stock. It was a joke. No one respected AMD into one of the most respected companies in the world in literally less than 10 years. Like, to do that in less than 10 years from your joke stock, no one cares about you, no one cares about your company, to getting to a place where you're one of the thought leaders in the overall financial markets, and like it's incredible what she's pulled off at AMD, right? And obviously what Jensen's done at NVIDIA over time has been amazing as well, right? But it's really fascinating because it's a story of retail. Because I remember talking about AMD stock a few times on the YouTube channel. I've been on YouTube for like 100 years, if you didn't know, okay? And I remember talking about AMD stock. This is even back in like, maybe 2016, 2017, okay? And I remember there was actually a really strong investor community around AMD, and I wasn't really bullish on the stock. I wasn't bearish either. I was kind of like middle ground. And it was fascinating to see how strong like the retail community was around AMD back in those days. And so I just think, a lot of times retail gets disrespected as they don't know anything. I can tell you, retail investors are really freaking smart, okay? Some of these retail traders that come in and gamble around stocks and do the AMC and GameStop stuff and all that crap, okay, and the Wall Street bets, that's a whole different category, okay? But the real retail investor community that I've seen over time, these are some of the smartest individuals you ever find, okay? And I've seen these folks form strong communities around stocks like AMD in the past, around stocks like Tesla, around stocks like Palantir. I see it definitely even in a stock like SoFi, right? And so I think retail deserves a little more respect than I think retail gets out there. That's what I'll say about that. Tesla reported a beat on the bottom line, and they reported a beat on the top line. Top line, bottom line, basically meaning revenue and net income, or EPS, okay? And so Tesla's more impressive beat was on the earnings per share line. Now, by the way, Seeking Alpha has Tesla beating by about $200 million of revenue. From what I saw, based upon what most analysts had out there, it was closer to a $400 to $500 million beat. But nonetheless, they beat by several $100 million of revenue, and they beat very nicely on EPS. That was even more impressive, to be quite honest. They also beat on a super important number, okay? Not deliveries, not revenue, not EPS, not any of those things, okay? Those are all important, and they pretty much beat on all those. But there's one extremely important thing this company beat on, and that is margins. They beat on margins as well. So overall, Tesla came in with actually the type of earnings you really wanted to see. They did have a couple worrisome things to say on the conference call. But other than that, like in terms of it, you just look at the base numbers, the revenue, the EPS, the margins, everything came in better than expected, right? For Tesla, and I'm a big Tesla shareholder, but the company's between a rock and a hard place, which is a famous expression. I think I might have first heard that from my dad. It's, when you got no good options really, and you just kind of got to deal with what you got to deal with, okay? You're in between a rock and a hard place. Because Tesla has a horrible situation going on, okay? That it's really hurting them, and it has nothing to do with them, it's just the environment we're in. Here's the deal, okay? Rates are very high right now. They could be going higher. We've heard rumblings about the Fed continuing to raise Fed funds rate. If that happens, obviously it's going to put pressure on interest rates and could obviously make, let's just call it harder and harder to get a car loan, okay? So if rates are high, that's bad for Tesla's business model. On the flip side, if we have a recession, which is something that could take rates down, right? Because if there's some sort of recession, real economic worries, then they're going to start lowering interest rates, right? That's what the Fed does if there's a recession fear. Well, that's also bad, because we know when a major recession happens, you know how many less cars are sold? A lot less cars are sold in a recession, okay? A lot less, right? And so any way you kind of slice it, Tesla's in a really bad situation that they have nothing to do with. They can't control what the Fed does or what the Fed doesn't do. So the only ideal scenario for Tesla in the short term, meaning the next 12 to 24 months here, is a scenario where the Fed starts to lower interest rates at some point in time, but we don't have a major recession. We maybe have a minor recession or no recession. So ultimately for Tesla in the short term really needs a soft landing, just to be quite frank, for obviously to kind of boost up numbers, right? And so that's why somebody like myself, I look at the back half of this year with Tesla, and as a Tesla shareholder, I think it's going to be a tough back half of this year, because if rates keep going higher, it's going to be seen as this is going to continue to hurt Tesla's business more and more. Less customers are going to be able to afford a Tesla. Less customers are going to get approved for a Tesla. And that's going to, ultimately, it will hurt Tesla's numbers, right? And we've obviously heard Elon Musk talk about that several times. But on the flip side, if we start to get more economic worries and it's more fear about recession for 2024, it's not going to be a good thing for Tesla stock either. That's going to send Tesla stock down. So that's why I think it's going to be a tough back half this year. Doesn't mean Tesla still can't go up and maybe, approach 300s or 350 in the back half of the year. But I can tell you, it's going to be tough sledding. It's not going to be like it was in the first half where it just was seemed like every day you made money on Tesla stock. It's going to be a tough sledding back half of the year. I think it's possible Tesla could eke out some gains, but I think it's going to be tough sledding. And I think there's also a potential where Tesla goes down to 250, 225, something like that, okay? Now, on the flip side, we have Cybertruck coming, right? Now, the very, very short term, it's a bad thing because whenever Tesla's having to ramp up a new vehicle, we do know it's very costly and it actually weighs on profitability. But if you're looking at 2024 and obviously future years, this is massive. This is the most talked about vehicle in the history of mankind, okay? And so when we talk about Cybertruck, just understand this is a whole different animal. And the numbers Cybertruck should put up over the next 5-10 years are going to be ridiculous, okay? So it's extremely, extremely exciting here.